In this video, you will learn the 9 keys to investment success. When we think about investing our savings, we imagine there is the right way to go about it. We can imagine there is some silver bullet to investing successfully. However, as we start our investment journey, we learn that there are many ways to make money in the markets and none comes with guaranteed success. However, before we get started, why don't you give the video a thumbs up and subscribe if you are new? That said, let's dive in. Number 1, patience. In your journey as an investor, you will meet many people who have crashed and burned their wealth because of their quest to get rich quickly. But as the famous American investment expert Warren Buffett said, no matter how great the talent or efforts, some things just take time. You can't produce a baby in 1 month by getting 9 women pregnant. Impatience and eagerness to get rich quickly are the key causes of failed investments and people buying into scams that promise high returns. It is important to recognize and be aware of the need to be patient. The famous Hungarian-American businessman George Soros said, "If investing is entertaining, if you're having fun, you're probably not making any money. Good investing is boring." In addition, to be a successful investor, you need to be focused. Charlie Munger, Warren Buffett's business partner, put it well when he said, "Our job is to find a few intelligent things to do, not to keep up with every damn thing in the world." Number 2, independent thinking. Here is something surprising for people just starting to invest. Sometimes beginners think that successful investors know everything about investment. But guess what? No one can be an expert in everything about the complicated world of money, like the financial markets, how the economy works, or all the rules and laws about money. Here's the secret. Successful investors hire the best experts in what they need help with. They might not always do what these experts say, but they listen and take in the valuable stuff. It's like having a team of experts on your side, helping you make the best decisions. No investor got rich by merely following investment tips. All successful investors practice independent thinking and are responsible for deciding whether to invest in a stock. In the 1990s, Warren Buffett refused to ride the dot-com wave, a decision for which he was ridiculed. In late December 1999, Barron's even published an article titled, "What's Wrong, Warren?" which suggested that Warren might have lost his magic touch as the tech-heavy NASDAQ went up by 145%, while Berkshire, adamantly holding on to its value stocks, was down 44%. And then, as we all know, the dot-com bubble burst. Standing against the temptation to follow the crowd is the mark of a true independent thinking investor. As Peter Lynch, a legendary investor, said, "While some might mistakenly consider value investing a mechanical tool for identifying bargains, it is a comprehensive investment philosophy that emphasizes the need to perform in-depth fundamental analysis, pursue long-term investment results, limit risk, and resist crowd psychology. It is essential to practice independent thinking and resist what is popular if you want to be a successful investor." Number 3, flexibility. Consider 2 types of thinkers, a small mind and a great mind. Small minds typically adhere to their ideas and resist change. Great minds, on the other hand, are distinct. They question everything and are relentless learners. The more they know, the less certain they become about things. Now think about this in the world of money and investments. In the markets, as we have seen, things are constantly changing. The financial market might seem stable today and come tumbling like dominoes tomorrow. So, to be good with your investments, you must be flexible. Your plan should be able to change when the market does. It should be made to take advantage of these changes. Number 4, a plan. Being good at investment is like playing a game. To win any game, you need to be disciplined. Imagine you found yourself on a journey tomorrow morning. If you don't know where you are going or how you are going to get there, you might end up in a totally different place. Since the investment journey is unpredictable and can sometimes become emotional, it's crucial to have a clear plan. The trick is to figure out what you'll do in different situations before things get moving. Successful investors know how to manage their emotions and expectations. They think about all the different things that might happen, and no matter what happens, they always know what to do. If you spend a lot of time worrying about what to do with your investments, it is because you are still learning, and that's okay. The thing with successful investment is that it takes time to get good at it. You too can become good at it with enough patience, determination, and focus. Number 5, value investing. Do you know someone who has a vast collection of stamps? Or someone who loves to collect baseball cards? Imagine that instead of stamps or cards, you have a collection of the most profitable businesses in the world. This is what investing is about. Warren Buffett, for instance, has some of the most profitable businesses in his investment portfolio, such as Coca-Cola, Kraft Foods, and American Express. Come to think of it, you become richer each time someone buys a soft drink from Coca-Cola, a snack from Kraft Foods, or uses a card from American Express. About 1.9 billion Coca-Colas are sold in a single day. That is 79 million cans of Coke every hour, equivalent to 1.3 million cans per minute or 21,990 cans per second. That is about 65,000 cans of Coke sold. And if you own the Coca-Cola company, you will be 65,000 cans of Coke richer every 3 seconds. That is the idea of investing, to buy and own profitable businesses. And in the stock market, you can own these businesses by buying their shares. What about value? Value stands for buying a good business at a reasonable price. You may be wondering why some people who have bought shares of profitable businesses do not make money from the stock market. The explanation is simple. They bought it at an overvalued price. That is why learning value investing is crucial, which calls for buying good and profitable businesses at sensible prices. And by practicing value investing, you will gradually master the secret to building lasting wealth. Number 6, humility. Most investors feel overly confident and even too proud once they taste success. Successful investors are confident in their abilities and have solid plans for their money. But here's the important part. They also know they are not perfect. Everyone makes mistakes, and in investing, there will be times when things don't go as planned. Successful investors, however, are okay with this. They accept that not every investment will be a winner, and that's just part of the game. So even when they do well, they keep their feet on the ground and remember that everyone, even the best investors, makes mistakes from time to time. Number 7, self-confidence. Being confident doesn't mean you think you are perfect. Confident folks can still be humble, knowing they have strengths and weaknesses. When investing, no one is born with all the confidence needed. Some people might start thinking they know everything, but the market quickly shows them they don't. Real self-confidence in investing comes from understanding the market and how your personality fits it. To get self-confidence, you plan things out in advance. You think about what you are trying to do and how you will do it. But guess what? Building this kind of confidence takes time, sometimes even years. Most successful investors didn't get everything right from the start. They made mistakes before they figured out how to succeed. It's like learning to ride a bike. You might fall a few times, but you are good to go once you get the hang of it. We do not need to be geniuses to invest. Many intelligent people are terrible investors because they rely too much on their intelligence. Ironically, the way to invest is to keep it simple. As Warren Buffett puts it, there seems to be some perverse human characteristic that likes to make easy things difficult. Try to hang around successful investors if you want to be the next one. Once you start spending time with investors, you will realize that the difference between a good investor and a bad one lies not only in the techniques each uses to pick stocks, for instance, but also in the investor's mindset. That said, thanks for watching. In case you have any questions, feel free to drop them in the comment section below. Till next time, have a great day.